Hello everyone, and welcome back to the channel. If you were watching the Singapore market in November, you saw something special. The Straits Times Index, or STI, hit a new peak, crossing the 4,500 mark. It was a month dominated by big earnings beats, strategic deal-making, and renewed optimism in the property sector. While tech stocks had a bit of a wobble, Singapore's blue chips, the banks, developers, and conglomerates, stepped up big time. In this video, we are counting down the top 10 best-performing stocks on the STI for November 2025. These are the companies that led the rally. Let's see who made the list. Number 10. Capitaland Integrated Commercial Trust, plus 4%. Kicking us off at number 10 is Singapore's largest REIT, Capitaland Integrated Commercial Trust, up 4%. In November, this REIT was a favourite for institutional investors. We saw reports of major buying from big funds, likely positioning themselves ahead of expected interest rate cuts. Lower rates are great for REITs because they lower borrowing costs. Plus, the trust continued to show strong occupancy rates in its malls and offices, proving that demand for prime Singapore real estate is alive and well. Number 9. Jardine Cycle & Carriage, plus 4%. At number 9, we have Jardine Cycle & Carriage, also up 4%. This conglomerate is a big player in Southeast Asia's automotive market. On November 10th, they released an interim statement that cheered investors up. They reported improved profits in their businesses outside of Indonesia, specifically in Vietnam, Singapore, and Malaysia. Even though their Indonesian subsidiary faced some currency headwinds, the strong performance elsewhere was enough to drive the stock higher. Number 8. Wilmar International, plus 4%. Number 8 is the agribusiness giant, Wilmar International, up 4%. Wilmar had a busy month of deal-making. In mid-November, they completed the acquisition of a stake in an agricultural business from the Adani Group. But the bigger story was likely the broader commodity market. With palm oil prices remaining resilient, investors saw Wilmar as a solid defensive play in a volatile global market. Number 7. Hong Kong Land, plus 4%. At number 7, we have the property developer Hong Kong Land, climbing 4%. This stock has been under pressure for a while due to the tough Hong Kong office market. But in November, we saw a relief rally. Reports surfaced of stabilization in Chinese economic data and new stimulus measures from Beijing. Since Hong Kong Land's fortunes are tied closely to the health of the Greater China economy, any sign of a turnaround there is great news for shareholders. Number 6, Genting Singapore, plus 4%. Checking in at number 6 is the resort operator Genting Singapore, up 4%. Tourism is booming. Genting's Resorts World Sentosa has been packed, and in November, analysts highlighted that visitor arrivals for 2025 are set to exceed expectations. Higher footfall means more gaming revenue and more hotel bookings. With major expansion plans underway, investors are betting that the good times will keep rolling for Singapore's premier playground. Number 5, Frasers Logistics Commercial Trust, plus 6%. Breaking into the top 5, we have another REIT, Frasers Logistics Commercial Trust, up 6%. This was one of the top performers in the REIT sector. Why? On November 7th, they reported their full-year results, delivering a distribution per unit of nearly 6 cents. Investors loved the stability. With a portfolio of logistics properties in Australia and Europe that are 100% occupied, this stock offered exactly what investors wanted in November: steady, reliable income. Number 4, UOL Group, plus 6%. At number 4, it's the property developer UOL Group, climbing 6%. UOL has been on a tear, hitting 52-week highs. In November, they received recognition for their corporate sustainability, but the real driver was strong sales at their new residential launches. With Singapore property prices holding firm and UOL's reputation for quality developments, the market pushed the stock higher as investors sought exposure to the resilient housing market. Number 3, OCBC, plus 9%. Taking the bronze medal at number 3 is OCBC Bank, surging 9%. On November 7th, OCBC released its third quarter results, and they were solid. Net profit hits $1.98 billion, up 9% from the previous quarter. The bank showed strong growth in wealth management fees and trading income, which helped offset slightly lower interest margins. In a month where Singapore banks hit new highs, OCBC's strong report was the perfect catalyst for a rally. Number 2. Jardine Matheson, plus 12%. Our runner-up at number 2 is the conglomerate Jardine Matheson, rocketing up 12%. This move was partly driven by insider confidence. In mid-November, reports filed with the exchange showed directors exercising options and acquiring shares. When the people running the company are increasing their stakes, the market takes notice. Combined with a broader rally in Asian conglomerates, this vote of confidence helped push the stock to double-digit gains. Number 1. Singtel, plus 13%. And finally, the number 1 stock on the STI for November 2025 is Singtel, surging 13%. On November 12th, Singtel dropped a blockbuster earnings report. Their first-half net profit nearly tripled to $3.4 billion, thanks to a huge gain from selling a stake in Airtel. But it wasn't just a one-off. Their underlying profit was also up 14%. To top it off, they raised their dividend. Strong growth, massive cash inflows, and a higher payout? That is the perfect recipe for a number 1 stock. So there you have it. Telecoms, banks, and conglomerates leading the charge in Singapore. It was a month where strong earnings and strategic moves really paid off. Did you catch the rally in Singtel? Or are you sticking with the REITs for dividends? Let us know in the comments below. And don't forget to like and subscribe for your monthly market updates. Thanks for watching, and see you in the next one.